As they say, it finally happened and history repeats itself. Saudi Arabia decided to crash the oil market by sharply lowering the price of black gold in order to win back the Asian market, which Russia brazenly entered after being kicked out of Europe. The world's largest oil exporter, Saudi Aramco, sharply lowered its August prices for Asia, which shows the oil and gas giant's desire to regain market share and restore volumes after the war with Iran. Experts are confident that Russia will not be able to compete with Saudi prices and will be forced to sell oil at a loss again. And as a result, it will be forced to curtail its trade across much of the Asian market, primarily in China and India. But at the very least, the Saudis will seriously squeeze them. At the same time, it is reported that the United Arab Emirates, after leaving OPEC in June, increased oil production to almost record levels and are not planning to stop. And in this situation, only Iran can save the Kremlin. And now the regime in Tehran has once again returned to attacking tankers in the Strait of Hormuz. 3 tankers were attacked in the past 24 hours. One of them is in critical condition and could explode, as it is filled with liquefied gas from Qatar. So let's discuss all of this now. This is a very interesting topic because, in fact, as they say, the Middle East is returning to the market, and the Saudis, together with the Emirates and Iraq, including Kuwait, could seriously, significantly displace Russia in China, India, and beyond. And as you can imagine, Russia cannot return to Europe. In general, the situation for it is dire. Let's discuss. My name is Alexei Pecci. Now we will discuss everything and lay it all out. But before we start, I ask you to subscribe to the channel, like the video, and leave any comment under this video. I would be grateful to you for that. So, after the disgraceful exit from the European market due to the war against Ukraine, Russia may be pushed out of the Asian oil market as well. The Saudis are now trying to preserve their income after finding themselves in a tough situation. The world's largest oil exporter, Saudi Aramco, has sharply lowered its August prices specifically for Asia. This apparently indicates the oil and gas giant's desire to regain its market share. However, even a record drop in the official price may not be enough to achieve this, to regain its position. Crude from Middle Eastern competitors as well as from suppliers in Africa and America is likely to remain more attractive. But in our situation, there's nothing bad about this, because as you can see, Russia is not on this list, and that's not by accident, because it's Russia that the Saudis want to push out of Asia, because they can't compete with it. So overall, the situation is that Saudi oil, and more broadly Middle Eastern oil, American oil, and African oil will all be putting the squeeze on Russia. Let me explain. The state oil and gas company of Saudi Arabia announced just recently that it has set the official August selling price for its main grade, Arab Light. It's set at $1.50 per barrel relative to the regional benchmark, Oman Dubai. Compared to July, the price was lowered by $11 per barrel. Well, it might not seem like much, but that's not the case. This is the most significant decrease since Reuters started keeping these statistics in 2003. So, just think about how many years that is. This is the most significant price decrease. As a result, prices hit their lowest point. Since June 2020, when the global market faced a massive oversupply and a drop in demand due to lockdowns caused by the COVID-19 pandemic. But the current situation partly resembles 2020. Market expectations have sharply shifted towards a surplus, largely because market participants assume that the conflict between the US and Iran is essentially over. That's why everyone rushed to sell their oil. For example, the United Arab Emirates increased oil production in June to almost record levels. More than 3.8 million barrels per day. They were able to do this after leaving OPEC and OPEC+, which allowed the country to get rid of these production restrictions. And they actually want to reach 5 million barrels per day. UAE's production in June was the highest since April 2020, exceeding the levels observed before the start of the Iranian conflict. However, further developments may call the assumption that the market will be awash in oil into question. Washington and Tehran still appear to be far from a final agreement that would formalize the 60-day truce reached in June. Saudi Arabia and other oil producers in the Middle East base their calculations on the assumption that the Strait of Hormuz will remain open, пролив останется открытым, and ships will be able to pass through it freely, even if Tehran retains control in one form or another. Returning to specific issues in June 2020, they allow for this and generally say, it's okay for us, we're fine with it, the main thing for us is that it remains open. In this scenario, the oil supply will be sufficient to meet demand, and the decision of Saudi Aramco was open. Specifically for Asia, which accounts for about in its sales, it is likely an attempt to regain its market share. And here it's important to remember that after leaving Europe, Russia successfully captured a significant part of Saudi Arabia's traditional market in Asia, becoming the #1 supplier both in China and in India. And it was precisely the expansion of Russian oil grades Urals and Espo, sold at a discount due to sanctions and so on, that forced Riyadh to go for a radical price reduction today to protect their positions. They're not hiding it or ashamed. The Russians have taken over our market, will slash prices to drive them out. Historically, Saudi Arabia has competed with the Russians for leadership in the Chinese market, but over the past year, the gap has become a crisis. As of the spring months of 2026, Russia holds 20% of all oil imports to China, while Saudi Arabia's share in China has dropped to 12%. So that's almost half as much. At the same time, India has become the main stronghold where Russia has practically pushed out suppliers from the Persian Gulf, not just the Saudis. And at certain times, the share of Russian oil in India's imports reached a historic high, exceeding 52%. Well, in second place is Saudi Arabia. But with a very large gap, Russia managed to capture the Saudi market in both China and India. It was precisely because Russian Urals oil was traded at significant discounts for a long time, undercutting any offers to Asian refineries. Saudi Arabia still maintained high official prices. Officially, India and China decided that, well, even if it's not entirely legal, even if it's under sanctions, it's better to buy Russian oil. Plus, Vladimir Putin uses an illegal shadow fleet of tankers to avoid expenses like insurance, for example, and so on. And now the current aggressive oil discount from Saudi Aramco for August is a direct attempt to deliver a retaliatory price blow, and to win back those oil refineries in Asia that over the past 2 years have completely adjusted their supply chains to Russian grades. But it's important to note here that in India, let me remind you, at the end of last year they said directly that, in principle, it wouldn't be that difficult to reconfigure refineries back to Middle Eastern oil. They say it's a matter of a couple of weeks. They just need to adjust their technology, then they can start buying Middle Eastern oil. This is when Trump threatened India with tough tariffs if they continued to buy Russian oil, but then Trump also lifted sanctions from that Russian oil. Well, yes, let's skip that part. We're talking about the Persian Gulf right now. At the same time, Trump has now reimposed sanctions against Russian oil, so the Saudis have a chance. Really, but let's go back to China once again. Oil supplies from Saudi Arabia to China in July are planned to be 700,500 barrels per day compared to 626,000 barrels per day in June. That is, in June, the minimum level was recorded at 626,000 barrels per day. That is, in June, the minimum level of Russian oil was recorded, and in July they are already increasing this share, and it's planned so that with each month it will be more and more. So, at the moment, this is still half the average level, 1.5 million barrels of oil per day, recorded during the 3 months before the start of the conflict in the Middle East. The decrease in purchases is not surprising. Aramco is aggressively trying to cut. Aramco резко повысила prices after the almost complete closure of the Hormuz Strait, which hit Middle Eastern oil supplies. Now, as we can see, Saudi Arabia is gradually increasing its supplies to China in order to gradually push out the Russians from there. And as experts assure, Beijing traditionally reduces its purchases when prices rise sharply and increases them when prices fall. The scale of Aramco's August price cuts may prompt major Chinese state-owned oil refiners to resume purchasing the full volume specifically from the Saudis. But the thing is, Saudi Arabia obviously has competitors besides Russia. Oil from other Middle Eastern producers, Kuwait, Iraq, and the United Arab Emirates, is now being offered at even bigger discounts. The United Arab Emirates, which left OPEC and OPEC Plus in May, according to traders, is offering discounts of several dollars per barrel, much higher than the $1.50 discount offered by Aramco for August deliveries. The Emirates are lowering prices even further. And this could force Riyadh to lower its prices even further. In other words, a price war is starting over who can sell more of its cheap oil. But again, as you understand, in any case, the only one left out here is Russia. Whoever wins in this Middle Eastern battle, whether it's the Emirates, Kuwait, or Saudi Arabia, it doesn't matter who cuts prices more or who sells more oil. What matters is that together they are all pushing Russia out of the Asian market. However, it's important to remember that such a scenario is only possible if the Strait of Hormuz remains fully open over the long term. And here, Iran had a surprise in store. On Monday evening, Iranian military forces fired at least 2 missiles at 2 commercial vessels passing through the Strait of Hormuz. Reports of the attack emerged after the expiration of a week-long agreement between the US and Iran to halt attacks in the strait. The resumption of Iranian attacks has jeopardized the Memorandum of Understanding signed less than 3 weeks ago. And now officials in Washington are hinting that the US will most likely respond with strikes on Iranian targets. Later, the British Maritime Trade Service reported receiving a message from another tanker that was heading south near the Omani coast in the Strait of Hormuz, which was hit. Quote, an unknown projectile that caused a fire. And at the time of recording this episode, it is reported that a Qatari tanker carrying liquefied natural gas has reported the risk of a major explosion after being hit by an Iranian missile. We can only wish success to Saudi Arabia and other Middle Eastern oil suppliers in driving Russia out of Asia. They were already pushed out of Europe, so now it's time to do the same in Asia. Let them mix that lousy gasoline for themselves and be stuck with it. Fortunately, there's enough oil in the world that we don't have to use that, Russian stuff. I'll leave it at that. Share your opinions and conclusions in the comments below this episode. Subscribe to the channel, like the video, hit the bell, and if you want to support the work of this YouTube channel, you can do so with any donation using the links and details in the description of this video. That's all for now. Take care of yourselves. Goodbye, everyone.